What's up, YouTube? Welcome to another exciting personal finance video where I'm talking about things like gold and silver, real estate, stocks, bonds, investing in general, personal finance, debt, all that stuff. Guys, if you're into that type of stuff or you just want to kind of hear my thoughts on things, like the video, subscribe to the channel, and check out my website, My Road to Wealth and Freedom. Okay, guys, quick disclaimer. I'm not a financial advisor, so please do your own research before doing anything like buying things like gold and silver, stocks, bonds, any of the strategies I discuss. Do your own research. My situation is not like yours is not like mine. We all have our own different situations, so please consult with a financial professional before making any of these decisions. Okay, guys, as promised, man, I have been so busy. We're in lockdown. I have kids home. I'm a teacher by day, working by night. I just get no time to do any of these videos. I apologize for that. I have been acquiring some more gold, as you guys saw in my last couple of videos, and silver. And I picked up another ounce I want to show you guys in a different video. But today, a while ago, I had mentioned I was going to do this video, and it's a video about why this year, rather than investing like crazy, I'm actually just doing something completely different for a while. I'm just going to have a laser eye focus on paying off my mortgage, my home mortgage. For my American friends, I'm in Canada. We can't deduct the interest on our mortgage. There's a real like convoluted way to do it. It's called a Smith maneuver. I'm not going to get into that detail. It's not a strategy that I really try to do or follow or whatever. It doesn't really apply to my situation anyway. So yeah, long story short, interest is not tax deductible in Canada, which is the big reason why I would want to do this. But there's so many other reasons why you'd want to do that. Let me just kind of run through some of my thinking, why I'm doing this now. And where I see myself going with it. So first of all, why do it? Obviously, the only major debt that I have is actually I have two actually. My home mortgage obviously is I think it's around last I did it was around 250,000. I had made some lump sum payments on that, and it's down today. My net worth comes out at the end of the month or first of the month. You'll see I'm down around like the 180, 179, that kind of range. So I already did make a big lump sum. I had some extra cash on the sidelines. I used that. I think I mentioned that before. But yeah, I want to be debt free. My other thing is I got a home equity line of credit that I borrowed money to invest. During the crash last year, I've done quite well. I'm unwinding that now. I'm basically starting to, having sold out completely because I got some gold and energy stocks that I'm hanging on to. But a lot of the other stuff I sold, and I'm slowly paying it back. So those are my two big debts. Total is about 230,000. But why do I want to be debt free? Same reason anybody wants to be debt free, guys. It's the freedom that it provides, right? It's just less stress, less worry. Hey, you know what? If you don't have any debt, all the cash coming in is basically, other than some monthly bills, which are like not that much at all. I mean, our biggest payment is for rent and if you're a homeowner, mortgage. That's a huge chunk of the budget. In my own personal situation, I'm paying about 20. My property taxes are included in it, so it's around. I think just the mortgage part is probably around. I'll say about 20. I've increased the amount that I pay each week. I pay weekly, because it pays down the principal faster. Bi-weekly. There's not much difference between a weekly and a bi-weekly. I just chose weekly for that extra few pennies that I'll save, I guess. But my straight mortgage payment's about, I think, $680 a week. That's an accelerated payment, guys. I could be much lower than that, trust me. But I don't want to have a mortgage hanging over my head. So that's one reason, okay? The debt free. Number two, it's a big one too. It reduces risk. I don't want to take on a whole lot of risk. I have a young family, like I mentioned in my last video, and that puts us in a hugely risky situation that I just don't want to find myself in. The money that I'm putting on the mortgage, yes, I could go and invest it, but I'm going to get to that in a second. So how does it reduce risk? Number one, job loss. I bet you most people who lost their job never saw it coming. You know, most people who were first are forced into taking an early retirement, they never saw that coming. And I know in my own career, I've seen it time and time again for the past 20 some years. You know, people retiring, being forced into retirement when they did not expect it. They hadn't saved enough. They still had a home mortgage. They still, you know what I mean? There's all sorts of life situations that can happen, take us by surprise, catch us off guard. Um, that's one type of risk, right? You lose your job. Sure, you can go get another job. Maybe you can't. I don't know. Like there is like structural unemployment now, so losing your job is not super easy to go replace it with what you made, or even you might have to take like a 50% pay cut in some cases. Um, I mean, that stuff happens. The other risk is rising interest rates. Now, in the U.S., I know you guys can lock in your mortgage. You know, if it's what 3%, 4%, you can do that for the whole 30-year term. In Canada, we can't. Most rates, most mortgages, locked in mortgages anyway. Their terms, 5 year, 7 year, 10 year, 3 year, 2 year. Like you can get all different ones, and that introduces an element of risk in terms of interest rates. Now, for the past 10 years, everyone laughs. Yeah, we've been at like hardly, like the 0% bound, basically. Most home mortgages have interest rates between 2 and 3.5%, let's say, um, minus 3.34. Um, I know people who have 2.5 or 2.2. Like you can get like, especially now with what they're offering. But a few years from now, 5 years from now, 2 years from now, 3 years from now, we could potentially be in a situation where we have massive interest rate hikes. Um, uh, it could be, back when we had stagflation in the 70s, interest rates, central banks are trying to crush interest rates. They're raising interest rates, trying to beat back inflation. Interest rates peaked in, I think, 1981, 82. I forget the exact date anyway, at around, I think in the US it was 15%. In Canada it was even higher. I think it was just below 20 or something like that. 20%. Think about that, guys. 15%. Right now, most people are paying 2%. If interest rates went up by 1 percentage point, 100 basis points is what the bond guys call it, there would be that like the payment would increase so much in comparison. Um, so that's something to be cognizant of, be aware of, and look out for, right? The other thing too is, if we do get like a housing collapse, deflation, and stuff like that, having a big mortgage can literally wipe you out. The other difference, now it differs in Canada from province to province, but most provinces, our mortgages are full recourse loans, which means it's not like you just mail the bank your keys and walk away. You can't do that. They can come after you. They can come after your other assets, investments. They can take your car, like impound your car, like or repossess your car. They can go after, if you have a tax-free account, investments outside of that. Maybe even I'm not sure. Maybe workplace savings plans, not pensions and not RSPs, which is kind of similar to like a 401k. They can't go after that, but they can go after quite a bit. So um, yeah, that's another thing. And I know people are talking about a debt jubilee, the new world order, the Great Reset. Well, trust me, they're never gonna. No bank is ever gonna say, "Oh, hey, buddy, guess what? All that debt you owe on your home, don't worry about it. It's free." They didn't do that 10 years ago when the subprime meltdown happened. They're not going to do that now. Um, so let me just move on from that. Please comment if you guys, if you think I'm crazy, if you got a different opinion or whatever. I want to share that. I want to learn from you guys. Maybe you guys learn from me as well. But number three, I've been saying this quite a bit now. There's no attractive investment opportunities. A lot of the stocks that I liked are like stock markets are at all-time highs. A lot of the value trade, like the banks, energy, like they've had big moves already. There's probably not a whole lot of juice left in those. Bonds are at record high prices, record low interest rates. Real estate is at nosebleed. I would not buy a rental property today if my life depended on it. Um, yes, send me your hate mail. I don't care. Anybody who buys real estate today is insane. Housing prices have never been this high. There's nothing left in it. And look at what happens. In the lockdown, you can't evict tenants. Your bank's not going to let you defer your mortgage payment on that rental property. Like, people are getting crushed. I'll be buying rental properties from landlords who didn't know what they were doing and who got into it and didn't see it coming. Trust me, I've had rental properties before. You need to run it like a business. And if you're not getting cash flow positive real estate, you're just like, what are you doing? Hoping that next year you're just gambling. If you buy anything in the hope that someone else is going to give you more money for it at some point in the future, it's essentially gambling. That's what that is. So I'm not a gambler. I'm an investor. If I don't get nice cash flow to cover my roof that I have to put on, or the leaky toilet, or property managers, then I'm not interested in any type of investment that I need to pony up and subsidize a renter. That's what you're doing. If you buy real estate and it's not cash flow positive, you are essentially subsidizing someone else to live in that nice house. So I won't do that. That's my take. I know there's a lot of real estate investors out there that would disagree with it. So be it. I've been there, done that. I know the game. So take that with a grain of salt, I guess. So yeah, no attractive investment opportunities. Number 4. Now I want to kind of get into some stuff that relates. Your cost of living dramatically drops, and you'll have a crazy increase in monthly cash flow. If I didn't have a mortgage payment, my mortgage, property taxes, I figure with all the lump sums that I put on, I'm paying almost $3,000 a month. Now that's a lot of extra payments. I don't have to pay that extra amount, but I do. In addition to that, I take things like my bonus, a savings plan, any extra money I make, I'm tossing it on the mortgage. I estimate that I'm probably paying down, $40,000 a year at least on this mortgage. $40,000 a year. Now, if I wasn't doing that, just imagine where that money would go. Just imagine if I sold my investments and paid my mortgage off, and I'm getting $40,000 a year. It wouldn't take that much. It wouldn't take long at all. Maybe 2, maybe 3 years at most to kind of rebuild my financial empire. And um, how much safer, better position would I be versus try to ride the roller coaster market that exists today? I mean, we could be in for a major crash. Maybe not. I don't know. No one has a crystal ball. But what I'm talking about here isn't about so much investing and predictions. It's talking about reducing risk, which is something that no one tends to talk about. Okay. Um, so yeah, that's one thing. Increased cash flow. Um, and this kind of relates to my point number 5. The easiest way to increase cash flow that is tax efficient. As I said, here in Canada, we cannot deduct mortgage interest on our personal residence, on our home. So I just want to talk about this because this is all kind of relating. My increase in cash flow, because I get a lot of people who are like, oh, you'd pay off 3% mortgage. Well, that's stupid because you can make 10% in the stock market if you buy an index fund and just ride it out over 25 years. Okay. True, but as I just said, we're at all-time highs. The chances of us going much higher is I don't see it, and chances of us going much lower could be, there's a lot of downside that could happen, especially if we get into sovereign debt crisis and hyperinflation or just even stagflation and that. There's a lot of bad things that can happen. So I don't want to kind of like go on that too much, but I just want to kind of throw that out there. Okay. The other thing is this: I could earn a lot more money investing. So if I'm investing outside a tax sheltered vehicle, like outside your retirement plan, outside like a Roth IRA, or in Canada we have a TFSA, a tax-free savings account. If you're investing outside of that, you're getting taxed on that investment. Now, sooner or later in Canada, I think that like the Liberals have been setting the bar so low on income tax that you don't need to make a whole lot of money until you're in like almost the top tax bracket, which is about 44% of every dollar that I'm going to make will be gone in taxes. So I'm at the point is, where are you going to fight the war for your wealth? Are you going to fight it at the top end, constantly trying to hustle, going out on a limb, making crazy investments to try to get ahead, and just be in that top tier tax bracket, 44%? Or do you want to attack it at the bottom level at your basic monthly overhead costs. Once that's, like I said, guys, once that mortgage is paid off, I'll easily be able to bank $40,000 a year, maybe even 50. So I put a lot of money on this mortgage. So that's one of the things I'm looking at, right? And all that money is, that's all my free. I don't need to go earn a crazy amount of money. I don't need to take on excessive risk to get these outsized returns, to cover the taxes, to cover that dollar. You don't need to play that game. Personal finance isn't that complicated. It's actually really, really simple. And that's one of the things I'm thinking about. Now, if the market were to crash, if there was incredible, like if we got like a 2009 level market crash, then I'd be doing something totally different, guys. I would not probably be doing this. I'd be instead probably investing heavily. I need to see something that's really, really undervalued and it's worth my while to take the risk and time to hold it until it goes back up or whatever. Meanwhile, I guess you'd be collecting dividends on the way and stuff like that. There is a time to invest. I don't want to say like, hey, I've walked away from investing, because I haven't. I invest every week, every month, a little bit goes into my retirement funds and stuff like that. But this is the extra money that I got. This is the extra stuff that I save and what I'm doing. Now, my two final points are sort of related. I'm talking about financial independence here. I've always felt that financial independence is basically a paid off home. And when you get a paid off home, you're financially independent. So that's kind of where I'm thinking right now. I don't need to make a lot of money. I'd need half the amount in dividend income, maybe 30 grand a year, and I'd be able to live the life I live and just be fine. So that's what I'm looking at. And my final point, guys, and I've said this throughout this video, I just don't feel that this is the market to make money in. It's not about making money right now. Everything's at an all-time high. We just went through that. Real estate, stocks, bonds, crypto, even gold and silver, they're at or approaching like all-time highs. So what do you want to do in this thing? This is not the market to make money in. This is the market to preserve wealth and reduce risk. That's what I'm saying. It's unpopular. Probably no one's going to even view this video or share it, but I don't care. That's the dash darn truth, guys. I'm in it to preserve wealth, cut risk. We're in a global debt bubble. There is going to be some form of deflation. I don't know. Maybe it's not going to be in Canada or the US or Europe. Maybe it will be over in Asia. Or maybe we get crazy inflation and other places get hyperinflation. Bad things are going to happen. There's a huge debt overhang. So many businesses have gone out of business. There's major problems. So I don't want to kid yourself. I don't want to kid myself. I know what's coming. And I'm not trying to sound like an alarmist or anything like that, but that's just the fact. You want some precious metals exposure. You want to cut your debt right now. And build a little bit of cash pile too, I would say. So you want to play it safe, right? A lot of the big investors, they're not out there buying crazy overvalued stocks and stuff like that. They're not playing the game. They've basically sat on the sidelines watching. I feel like the market is being dominated by a lot of people who probably don't have a lot of experience, understanding, or knowledge. Like, there's gamblers, sports gamblers and everything. Like, it's just insane. The millennial crowd, that some of them probably do understand investing, but maybe a lot of them don't. Maybe a lot of them are just like, hey, my buddy said to buy Tesla, so I'll buy Tesla. And everyone's on that bandwagon. This is not a market I've been through several crashes now, and this is the kind of euphoria that you see. Can it continue? Sure. But as we saw back in March, if you were trying to sell during the market crash, you had a hard time getting out, and you didn't get to pick your price because they were dropping too fast. So the markets kept shutting down. It kept circuit breakers and trips. So, anyways, guys, I don't want to go on too much, but I hope you've enjoyed this video. These are just my reasons for paying off my debt, my mortgage. I'm attacking it hard this year and next. It was probably, I got about 180 grand left on this mortgage. I'm going to really try hard to get it paid off this year and next. And I may even sell some of my tax sheltered assets, like in my tax-free account. I hold some stocks there. I might sell some of that to meet that goal. Like I said, I don't care. I'm not afraid if I miss out on a percentage or two gain on the stock market. For all I know, it could drop 40% like it did in March. Maybe it does that right at the time when I paid off my mortgage. Then I'm sitting pretty and I'm ready to roll. So that's it, guys. Like this video, subscribe to my channel, and please check out my website, My Road to Wealth and Freedom. Take care.